Hey, welcome back to YT Finance, and today we are talking about Workhorse stock news, if it is a good time to buy Workhorse stock, why I personally am buying WKHS stock this week, but why you might not want to. Remember, as always, to press that like button right now, subscribe if you are new, if you are already subscribed, thank you so much, you are what's keeping me going here on YouTube. Comment down below your thoughts on Workhorse stock, and let's make you some free money with Webull. Webull is a brokerage where you can buy and sell stocks, options, and cryptocurrencies easily. Right now, if you make an account with Webull, they will give you 2 free stocks, each worth anywhere from $2 to $250. And if you invest $100 or more on your first deposit, you will get 2 more free stocks, each valued from $8 to $1,600. You are basically guaranteed to make $20 or more if you cash out immediately, or you could luck out and receive up to $3,200. Not to mention that you also have a 1 in 100 chance of getting stocks like Facebook, Starbucks, or Snapchat, and you have a 1 in 50 chance of getting stocks like Google, Procter & Gamble, or Heinz. To get this amazing offer, just go to the link in my description box down below and do it quickly because this offer ends on New Year's. Just so no one is left out, there are also links down below that can give you cryptocurrencies or other free stocks with Robinhood, but I like Webull's deal better because you get 2 free stocks just for making an account, and you get 2 free better stocks if you invest $100 or more with your first deposit. With that being said, let's jump into our first Workhorse Group article. Workhorse has had a plethora of problems recently, with the USPS contract being delayed even further into 2021, Workhorse having battery supplier concerns, and the fact that WKHS stock pulled back 20% in December. So why am I still bullish on Workhorse stock, and why am I buying even more this week? Well, an analyst from BTIG named Gregory Lewis says that Workhorse stock is worth $26, which would mean around a 19% gain in the coming months from Workhorse's current stock price. The analyst continues in saying that Workhorse was foolish to only buy from one battery supplier, and now Workhorse is learning from this mistake, so they plan to tighten up their supply chain. Because of this, Workhorse is adding another battery supplier, so they can produce almost 2,000 vehicles in 2021. Workhorse anticipates to make 100 vans a month by the end of the first quarter, and 200 vans per month before quarter 3 starts. The analyst continues on to say this, and I quote, "In terms of getting to free cash flow positive, management thinks volume needs to be in the 300 vehicles a month range." I would say that is exactly right, which would put Workhorse making around 3,600 vehicles per year without any further improvements, but of course we would want improvements, and it sounds like Workhorse's management wants production improvements as well, and they are currently working on it, which is great news for us. But you could say, what about the USPS contract? Well, he talks about that too, and I quote, "As we have noted in the past, we are less concerned about when it is announced and more concerned about how much of the contract WKHS wins." The quote goes on and he says, "We will continue to view the USPS contract as a significant potential catalyst for the stock. This signifies that even without the USPS contract, Workhorse to him is worth $26. However, Lewis and other analysts continue to debate the actual value of Workhorse stock, which ranges, so let's take a look at this stock forecast. According to 6 Wall Street analysts, with half saying to buy and the other half tells us to hold, the average Workhorse stock price is $24.20, with $19 being the low and $29 being the high over the next 12 months. Keep in mind that this is without the USPS contract being taken into consideration, so even the average price target is approximately 13.51% higher than the current price, making us a quick gain. Now, I have been suggesting to people to aim for an average price below $20 for the long run, and to invest in Workhorse ETFs to consolidate risk while making sure that Workhorse stock does not make up more than 5 to 10% of their portfolio, because we don't want to be reckless here. Well, then that begs the question, why am I buying WKHS stock at the current stock price? Well, I made a video where I said I would put my money where my mouth was, and I was going to buy Workhorse stock, and you all get to decide how much I put in. Right now, I am only $200 in, so unless the video really takes off soon, it's going to be pretty anticlimactic, but a deal's a deal. Now, why you might not want to buy Workhorse right now is because their PS ratio, aka their price to sales ratio, is 2,435 compared to Tesla's 23, which is not good at all. A great PS ratio is 1, and Workhorse is definitely way overpriced and overvalued according to this ratio, which is partly due to the USPS contract. But because Tesla brought in this massive EV wave that will span across the next 10 years, we are definitely in for a wild ride. If you have been following these articles or my channel, we have correctly predicted the profit opportunity in October, and some of us traded in time to make profits from November and September. But for the record, I did miss December's last drop because I anticipated that was when the USPS contract winners would be announced. For more good news, this last week Pfizer's vaccine has been approved by the FDA, which is the Food and Drug Administration, to roll out their vaccine in mass. Another great thing is that electric vehicles are fighting ICE vehicles, which means internal combustion engine vehicles, very successfully, where basically all legacy automakers are now making electric vehicles as well. Just think, 80 million ICE vehicles are sold every year, and if electric vehicle makers get even a small portion of that pie, which is set to increase as the years go on, finding a good electric vehicle company stock right now could make you lots of profits in the future. However, I would not consider betting everything on Workhorse Group because the opportunity cost for other stocks like Tesla and NIO are so high. Workhorse needs to copy Tesla because Tesla is trying to capitalize on economies of scale, which is when you produce so much product that the more products you make past a certain threshold, your production costs actually get much cheaper. This is one of the keys to long-term success for manufacturing companies. If you own Workhorse stock below $20 and you are holding for long term, then you could just let it ride. Everyone else consider trading or lowering your average price without compromising that 5% to 10% portfolio weight. Workhorse stock is very volatile, which makes it great for trading stocks. However, if you do not know how to trade or that you are new to trading, avoid trading at all costs like the plague, because it is a sure way to lose money. Now, I am a long-term investor, so I do not trade, mostly because of the major taxes you are hit with. But you could look into stock options, which are safer, but make sure you fully educate yourself first. Or, finally, you could just be like me, a boring old safe investor who likes good stocks and ETFs to hold long-term. But whatever you decide to do, as long as you are making profit, I am happy. Remember to leave a like, comment, and subscribe, and I'll see all of you in the next YT video.